Are you thinking of starting your own business? Do you not know what kind of business to open up? In this video, you're about to discover the pros and cons of each business type. By the end of this video, you're going to know what kind of business you need to open, the good, the bad, the ugly of each type. When you stay to the end, there'll be a free gift valued at over $250. Do you know the four business types that you can open up? They are sole proprietor, an incorporation or Inc., an S corporation or 1120S, a limited liability corporation or partnership. So by the end of the video, you're going to know what each one does, the good and the bad. Hi, my name is Albert Corey from Corey and Associates Accounting Advisors. We've served over 35 business clients since 1985. We've worked with clients from kiddie actors, truck drivers, and almost every kind of business you can know of since 1985. If you got a question, we're going to know the answers. So now on with the show. The first thing we're going to talk about is a sole proprietor. A sole proprietor is the easiest thing to open up. That's one of the good things. The other good thing is it doesn't cost you any money to open up. You can start a business almost instantly. A lot of people that are realtors, tradespeople like plumbers, carpenters, mechanics, almost any kind of business you want, you can start almost instantly with sole proprietor because you don't need anything to open up. The bad part is there's a couple of bad parts. The first one is when you're sole proprietor, if something goes wrong, you are responsible. You could be responsible. A good example of this is if you're a painter and you poured paint on a car, then they could come back after you as a sole proprietor. In some of the other types of business entities we're going to open up, you may not be on the hook. Obviously, please consult your accountant or realtor, or attorney, okay, to get any of these questions answered. But they're really good, like I said, when you're trying to start up and get things going. Another probably bad part of when you have a sole proprietor is if you're trying to do some kind of a wholesale businesses, there's a lot of companies who won't do business with sole proprietors. You got to have a corporation or a business entity open to get it started. So now the next one we're going to talk about is a corporation. So a corporation is pretty much you're going to fill out some papers and send it to your state Department of Corporation. When the papers are done, you are now open. That is very good because as a full corporation, there could be wholesalers that now they'll sell to you. Um, Another good thing about it is if something goes wrong, you're not on the hook. So, as a corporation and you signed a lease to open up an office or store and something happens, then they can't come back after you. They can only go after the assets of your corporation. So that's the good thing. The bad thing about a full corporation or 1120 corporation is that if you make a profit, then you got to pay 25% profit back to the IRS. The other thing is if your company has a loss, and a lot of startup businesses could have a loss, it doesn't transfer over. So my recommendation is that I tell most people who come into my office do not open up full corporations. The next one we're going to talk about is what I recommend the most. So the next one is a sub S corporation or 1120S. This is the most popular one that I've been opening up for almost 40 years. You see, it gives you the same protection as a corporation, meaning that if something goes wrong, They can't come back after you. Remember the example of the paint. Okay, if you pour paint on a car, they might not be able to come back to you if you're set up right and you do everything right. So that's also a good thing. The also good thing is you got to start, you think of it as yourself as a Walmart. You're now a shareholder of the company. So as a shareholder, the profit and loss transfers back to your personal return. It doesn't matter. So in simple terms, if you got a sub S corporation, think of it as if at the bank they gave you interest. So when you get the interest, you put it on your tax return. If you got 1120S corporation or business, they're going to give you what's called a K1, and that goes on your personal return. So like I said earlier, think of it as getting interest in the bank, and you can take the profit and loss. Now the bad thing is that you can only have 14 partners. This could be bad if you think one day you're going to try to expand to be like super big and large. That might not be good for you, but for my regular clients who come in the office that are normal startups, they only have 1 to 2 partners. That's very good. You can only have assets equaling $250,000. But what I've seen over the last 40 years is most people coming in my office do not go over that amount as a startup. So, as a startup or just coming out of the box, it's very good. Obviously, if you try to do wholesaling and stuff, a lot of corporations, a lot of wholesalers, they will sell and do business with corporations, 1120Ss, because to the world, you're just like a regular corporation. You have the same liability where it can't come back after you. Like I said, with the example of painting, where if you spill paint on a car, they can't come back. Or if you rented an office and all of a sudden the business doesn't work out, they cannot come back to you if the lease is in the lease is in the business's name. Like I've been saying, please consult your attorney or somebody else for more details. Now, another one that's very big on the internet, but that I don't always recommend, is a limited liability company, or as the world knows them as an LLC. So we'll talk about the good side of it. The good side is the good side of this is guess what? It's going to protect you if something goes south, protect you and your partners. If you make a profit, you don't realize that you're going to have to pay Social Security tax on the profit, which most people don't realize. It's also good if you're buying a lot of real estate, especially in the states that the values are soaring. So that obviously, if you in mind your states the values are soaring, an LLC is a great way to buy real estate. But here's some of the downfalls of it. Obviously, one, like a corporation or sub S company, you have to pay to get it open. You would go to whatever state you're in, the division of corporation, to get it open. You can have unlimited partnerships, so you can have as many partners as you want. You can make as much money as you want. So if you make a profit or a loss, it could transfer over to the shareholders. What does that mean? Think of it as interest if you're in a bank and they gave you interest. So if you're in a bank and you're in interest, go straight on your tax returns. With an LLC, they issue what's a K1. A K1 is like the interest, it's a sheet that transfers over your tax returns. So here's some of the bad parts is most people who open up limited liability companies or corporations, they don't have partners. So that's bad. So now you're almost like a sole proprietor. That's one. So as a single member, it's called single member LLC. Then if you're a single member, it goes straight on your tax return as a personal return. That could be very bad and it could hurt you. especially if your company is a loss. Now, a good side of that would be is that you can file what's called a 2553 form. You send that in, and now you can become a sub S company, and the world will see you as an LLC, but the IRS will see you as a sub S company. We've been fixing plenty of people who think they can open up the LLC on their own. They don't want to spend money. They don't go to anybody to help them get it open. And in my opinion, you open up wrong. So please, when you open up any of these businesses, ask somebody to go out and help you and pay for it if you want to get it open right. And obviously, you got to pay to get it open. And you also have to pay whether you're a sub S company or corporation every year. In most states, you got to pay for the renewal. So now, thank you for subscribing to our channel. Thank you for subscribing to our channel. Follow us on social media at Albert C360. When you subscribe to our channel, we've got some amazing videos on how to save money on a tax return. What are the mistakes you make while opening up your corporation? How to run your business properly. Now that you stayed to the end, you are now going to get our free gift. As a thank you for listening to us and going to the end of the video, we're going to give you a free consultation, a 15-minute consultation valued at $250. You just need to call our office at 305-823-9228 and say you heard from us on the internet, and we'll gladly give you a consultation. It doesn't matter whatever state you're in. We're here in Miami, but we got clients all over the country. This video is of the opinion of the speaker. Consult your own attorney or accountant.